Which should you have more confidence in? This cotton fiber note that has been in existence for only 109 years in its current form, and by design is set to lose value at a rate of at least 2% per year, many times much more than that. In fact, since its creation, it has lost over 98% of its value. Or gold, which has stood the test of time and maintained its value for thousands of years. The answer should be quite clear now. It is gold. And with that, we could probably end this video because that is the perspective I'm talking about. But I'm going to go into it a little bit more. I'm going to be referencing a piece here that was written by Claudio Grass, which I think really does give us some perspective on gold. And for many of us, we live in such a dollar-centric universe that it's hard to look beyond these Federal Reserve notes. But I hope that this video will help give you a little bit more confidence that holding gold is the right thing to do. You know, the question is often asked, if gold is such a great hedge against inflation, why hasn't it skyrocketed now that inflation is finally here and well entrenched year over year? There's a couple of reasons for that. Some are more obvious than others. The interest rate hikes that the Fed spearheaded and repeatedly escalated are the most straightforward explanation. At least that's the answer most mainstream economists and analysts will give you. And it does make sense. If gold pays no interest for holding it, then why not switch to something that does? This is the mindset of most investors, and that weakens demand, which in turn drags the price down. That's how the theory goes anyway. But if we're willing to examine it a little bit more closely, we might begin by scrutinizing the premise. The question takes for granted that gold has underperformed this year, but has it really? If you're saving, getting your paycheck, and paying your bills in a currency other than the dollar, you're likely to have a very different view on this issue. In fact, if you scrutinize your own finances and your wages, you probably will have that same conclusion as you would with these other currencies. In euros, gold is up around 6.6%. In yen, it's up 17.9%. In Egyptian pounds, it's up over 45%. What this clearly shows us is that perspective does matter. And if you look at the bigger picture, that perspective is even clearer. Thinking about gold price in terms of any fiat currency, not just the US dollar, is not really helpful. It's not gold's value that fluctuates. What fluctuates is the perceived and total imaginary value of all of these currencies around the world. After all, as in the long term, responsible precious metal investors know very well. In fact, I don't like to refer to them as investors, but rather those who hedge and save. We're really savers when you think about it when we hold gold, because we are saving our worth, saving our wealth, saving something of value, a store of value that is constant. There's only one important trend, and it's the obvious one, and that is that gold is constant while all the other currencies fall. Now, the author here says that paper money is worthless, but again, as I note, this is not paper money. This is a cotton fibrous note, and it is worth something. None of us would reject it. I would even dare say if you saw this very dollar laying on the street, you would pick it up. But what is it about it? Well, let's take a look. It is about credit and debt. This is something that can give you credit. Now, obviously, cash in your hand is what it is. In fact, it loses a value right now, month over month, about 0.1%. But still, it's crazy to think about it. The note is legal tender for all debts, public and private. It is a debt instrument. Now, let's go back to a time when the government was threatened with this. They were threatened by this in 1934 and 1933 with the executive order that forbade the ownership of more than a certain amount of gold, and it was a buyback program. And I got this in change fairly recently. This is a reserve note, Federal Reserve note from 1934 that you can see here. Let's take a look at what it says. This note is legal tender for all debts, public and private, and is redeemable in lawful money at the United States Treasury or at any Federal Reserve Bank. This printed at a time and given when an executive order was out there that banned the holding of lawful money, that is gold. So quite interesting indeed. And this being a Federal Reserve note as well, into the 30s, well, there it is. Granted, we still live in an age of this Federal Reserve System. But in 1934, this $50 was worth a whole heck of a lot more than it is today. Yes, indeed. But I got it in change recently. But the thing about it is this note being of script, it's a nice historic note. It's really not worth a whole lot, sadly. And by the way, this note stinks to high heaven. It really does. It almost reeks of some sort of poisonous thing. I'm not even sure what it is, but I'm going to put it back in this flip here so I don't have to smell it anymore. Ugh. I'm going to try to sell it. I hope I can get a little bit more than 50 bucks out of it, but I kind of doubt I will. Ugh. It even smells on my fingers. Nonetheless, now this article continues here. There's no short-term price considerations that should play a pivotal role in the decision-making process of investors who hold gold for the right reasons and who understand why they do. What is important, however, is to look beyond the mainstream headlines and to be able to separate the signal from the noise. One can find a million analysts and forecasts on gold's outlook, all highlighting superficial dynamics and featuring simplistic arguments. In fact, I probably have been guilty of that myself. Monetary policy projections are chief among them, and the narrative goes, since we expect central bankers to do so-and-so, gold is projected to react in this or that way. And it will. It does. Gold does react to short-term of things, such as the bond market, such as the dollar index, the stock market, geopolitics. And those are the day-to-day and week-to-week and even annual price movements of gold. But in the end, we know what happens. It's about perspective. We sometimes have our blinders on in that regard. Instead of trying to divine the intentions of central bankers, to guess what they'll do and how and might that affect the gold market, wouldn't it make more sense to look at what those central bankers have actually done rather than what they say? And that's a very good point by the author here, because what they did in 2022 speaks volumes. Globally, central banks accumulated gold reserves at a pace unseen since 1967, back when the dollar was still backed by the precious metal, like that Federal Reserve note saying redeemable for lawful money, even under the Federal Reserve System. So believe it or not, the gold standard and the Federal Reserve System did coexist for quite a while during the point of American history. Yea, though, that is a very small window of time, and it should only have a very small impact on your perspective for gold. Considering for a moment and recall all their official statements and projections about the economy and how a recession is avoidable, about inflation and how it's definitely, absolutely under control or transitory, and about their faith in their own currencies. You can draw your conclusions about what's coming, and we know what's already happening with inflation. We've seen it happen time and time again with double and triple digit inflation around the world and collapsing currencies and reinvented currencies. We know what's coming here. It's only a matter of time. They're talking about it out in the open right now. So if we look forward, we can see that there are reasons to be concerned. We've got geopolitics. We've got pre-existing problems that seriously aggravated can also be expected to linger, if not get worse. Inflation is set to continue to plague the real economy, no matter how hard government statisticians try to cook the numbers. Even if the CPI goes down, real households will continue to feel the pain, no matter how they measure it. And by the way, you measure the consumer price index year over year. But if the measure is based off the foundation of a base from last year, what was already really high, it's not getting any better, folks. It really isn't. Just like on the unemployment numbers. You know, they'll only pick out the U3 number. Well, there's 6 of those, by the way. The U6 is the one that really tells the tale, and even it doesn't give the full scale of the people who really do not, many that fall through the cracks and aren't looking for work, or they're not being counted. So there's all of these price forecasts for gold to go which way or the other. And some people say gold's going to go to 3,000, and there are certainly conditions where that could happen. People say that, well, gold will fall to $1,500. That's a pretty wide gamut. But no matter what the price does in the coming year or years, we know that central banks are holding it for a reason, including our own central bank here in the United States of America, as we have over 8,100 tons of the stuff. That is, if you believe it. But why would the U.S. government be so vague about the gold holdings? They just tell us it's there. We take their word for it. And the fact is they're not going out of their way to prove that they have it. I think tells us that they do have it. It's the silent card they have behind their chest. Because most Americans typically really don't even care about what kind of gold or any gold that we have in our treasury. While price gains will certainly be more welcome for physical gold investors, I use that term because, you know, when you think about it, when people put their money in something, they would like to see their money grow with it. But that's the wrong perspective to have for gold, in my view. You should look at gold as a wealth preserver, as a savings vehicle for your finances. The dollar, by design, is losing value every year, no matter what. By their own targets, open-ended, the Federal Reserve says we're okay with it inflating 2% per year. We're okay with that. And you should be too. But no, that I will not accept that. I may have to transact in dollars, use it as a currency, but I demand wealth that will be a preservation device. I demand a savings vehicle where I'm not bleeding and losing the value of my money. That's where gold comes into play. And gold has got to be measured above and beyond price. This is why I distinguish between value and price. Value is a proposition that these gold pieces that you see before you here are indeed measured in ounces, not dollars. Yes, there's a denomination that you see on the back of this very coin here of $50. We ignore that. That is a denomination that the United States government puts on this, knowing full well that one would be a fool to spend this for $50, such as this note right here that I showed you here. Which one is worth more? This $50 bill, Series 1934, where it was redeemable for $50 worth of gold, or this $50 gold coin right here? I think the answer is pretty clear. It's about perspective. With gold, it's about perspective. And perspective is everything. So we have threats to financial sovereignty, government power grabs, increased monitoring and control over private assets and savings. All are likely to become more dire. And under these conditions, physical gold really shines, especially when it's securely and compliantly held outside of one's own jurisdiction, as well as outside the traditional banking system. And I say outside of mentions outside of the jurisdiction. Well, I'll tell you what, I want it in my jurisdiction, meaning my home or in the home of somebody I trust. And to wherever that is, heavily guarded, well protected. We are protected by this asset, gold. This monetary metal that has proven itself over thousands of years. It will continue no matter what kind of technology, no matter what kind of culture, no matter what kind of divide that we see in terms of government, policing, or what have you. We hold, and we have the right to hold and to benefit from gold's value. So I hope you found this video useful and insightful. If you did, I hope you will press that thumbs up button down below. And I want to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.